At NewSquare Capital, we believe that successful investing starts with delivering portfolios with a discipline. Discipline comes into investing from the start of it, and we're a huge proponent of that at our firm. All of our strategies are built around some component of risk management.
I think most people sort of look at the upside and market gains and when markets are going up a lot and think that that's the biggest part of their return over a long period of time. But I think what they don't take into account is managing downside risk, and doing well in an underperforming market can be just as important as doing well in an up market.
We have three pillars that we build our portfolios on. The first one being consistency and discipline. The second one being a process-driven approach. And the third one being risk management.
Consistency and discipline, obviously critically important to long-term success. The biggest thing that we see when people fail to reach their long-term goals would be moving away from the strategy that they had in place due to what the market does, what you read in the newspaper, what happens with elections, or whatever's going on at that moment in time.
That disciplined approach that we talk about is driven by process and is driven by data. And we try to consume as much data as possible when we're managing portfolios, because that ability to gather data, utilize it in a consistent and process-driven way, ultimately helps our end results and our end clients.
One of the things we try to do with clients is remove the emotional part of their portfolio that they look at. Emotion tends to play the biggest role in having somebody move away from where they wanted to go, what they wanted to do, the strategies they wanted to pursue, and we try to remove that from the equation so that they can stay on the path that they had started.
Anytime we're speaking about investments, speaking about a plan for a client, it starts with the risk management component. There are so many times where people will come to us and say, hey, can you buy this for my portfolio? And many times our question is, well, what happens if you're wrong?
You're going to experience down markets, you're going to experience periods where you don't do as well as you'd like based upon numerous factors that go on in the investing markets. Managing risk on that side can help the client stay consistent, which is one of the other pillars, and not get them to change if they see that they're not losing as much money in a downside market as somebody else might be. I think you really start getting, not panic, but people wanting to change when they see big downside moves in their portfolio. So I think anytime you can manage risk within the strategy, it helps the person stay consistent over a long period of time.
As fiduciaries at NewSquare, we have a responsibility to act in the best interest of the end client. So that has to come above anything else that we do. We have to put the interest of the client above what we're doing as a firm, what we're doing with portfolio management. We have to have the end goal and the end investor in mind when we're making decisions as fiduciaries. And registered with the SEC as a firm, that is our responsibility, and we take it very seriously as a firm. At NewSquare Capital, we're partners. We're partners to the advisors that we work with, and we're partners to the end client. And in that partnership, we try to deliver the best results that we can with the portfolios that we've structured and built over time. And we're confident that we can help the end investor that comes through our doors at NewSquare Capital.